Hello again, welcome to South Tonight from the Waterford County Council Civic Offices in Dungarvan. Now tonight on the show we'll be finding out more about Waterford Sports Partnership and what they do. But first, in our finance feature, Gerry Owens is here to discuss the latest news from the ECB in terms of interest rates and what that means for our pockets. Hello again, Gerry.
Martina, how are you?
Very good, thanks. Now the ECB have met and announced a reduction in lending rates, 0.25%. Bringing rates now to a record low. So I'm sure they're hoping that this is going to kickstart the European economy again. Do you think that's going to happen?
It should do. And it should do because people have more money in their pockets. And to put it in context, in last September, rates were about 5.75%. And we're now to a mortgage rate which is probably going to be in the region of 2.75. So that's a 3% reduction in interest rate costs. And in terms of net mortgage repayments, giving somebody who bought a house, say 3 years ago at the peak of 300,000 and borrowing 270, their net repayment would have been about €1,236 after tax, and that depends on individual circumstances. The same person today is buying the house 30% cheaper, therefore they're borrowing much less. I reckon maybe about a purchase price of 210, borrowing 189, and look, cutting to the short end of the stick, the net cost of the mortgage they'll have at current rates is less than €600. So that means they have much more money in their pocket than they would have had 6 months ago. So it is a huge correction in interest rate costs, and certainly it means people will have money to go out and buy other things that they couldn't buy in the meantime.
And you might just clarify for us as well, because the ECB rate now would be 1.25%, but that's not what our rates are when we're, paying back our money to the bank. So what's the procedure there?
The ECB set a rate, and this is the rate that they guide as being the rate that banks should charge each other. And then you have, the bank will put on a small margin on top of that. So generally money market rates would be about 0.1, 0.2 higher than the ECB rate. So that's maybe 1.37. All right. And then the banks must put a margin on top of that to pay for their expenses, to pay for the light, the heat, the telephone, the services people do, the wages. Everybody has to get paid, and therefore they then set a rate. So the cost of money is the item that determines what they then charge. But I want to make one point clear to people out there. Just because rates have fallen to maybe less than 3%, it does not mean money will flow, because banks, when they're lending, will still lend stress testing those rates at possibly 6%.
What does stress testing really mean?
It means we assess the loan based on a much higher rate. Could you afford it if rates rose back up again? Because what we have had is the complaint, look, when rates were low, we lashed money out. We didn't. We were still stress testing. And then rates rose and people suddenly got caught. Now they've fallen again. Are people going to get caught again? No, we're still going to stress test at what they were 6 months ago. So that's why it's more difficult for people to actually get the sort of mortgage they want, because we're still stress testing at a higher rate.
And also, like you mentioned, the rate that was there, let's say last September, and 6 months later, it's way, way, way lower. But it doesn't necessarily mean that the repayment is halved at all. Not
necessarily, and that depends on whether you're a first-time buyer, whether you're going to get, for instance, relief for first-time buyers, 25% in the first 2 years, 22.5% for the next 3 years, and then 20% for the next 2 years, and then it drops to 15%. But the limit that you can claim tax relief on comes down substantially to €6,000 for a married couple, and 15% of 6,000 is like €75 a month, as opposed to maybe getting 200 odd euros a month as a first-time buyer. So in the 7-year period, it does come down quite substantially in the 7th year. But the first couple of years, and that's why each individual person, you're talking to friends and they're telling you what they're paying, you really have to go back to your own provider and get professional advice based on your circumstances. Yeah,
it is quite complicated. But it would seem that existing borrowers are going to save a considerable amount going forward.
Oh, absolutely, no doubt about it. I think I've worked it out on that sort of contract. They're still coming down about €200 or €300 a month. And that's after paying tax. Like, that's a lot of money for somebody.
Is there a hint that it could go even lower again, maybe another 0.25%?
I think it's likely, and the ECB president was quite happy to say to the markets, look, this isn't necessarily the lowest rate. It's just, we think, the lower end of where we might go. And it is cycles. So rates will come down. They've come down to about 1.25. And the next question is it going to be flat? and stay at the 1.25 for a period of time? Or is it going to tick down to 1% and then go flat? Is it going to turn up again? Because remember, the governments of the world, the G20, are going to spend an awful lot of money trying to kickstart the economy. That in itself will drive inflation. And then you're going to have the older argument, we must increase rates to dampen inflation. So this is an ever-changing situation, and it isn't a case of being right about an interest rate. You can be lucky sometimes to buy in at the right low rate, to buy a fixed rate when they're low, for example, as opposed to maybe 6 months ago when people got very, very frightened at the last ECB increase and decided, I better fix. And now they're saying, God, why did I panic? And in some respects, it's probably because they didn't get professional advice and had this fear that, look, this could go mad. And now they're suffering, and it's expensive to buy out at fixed rates.
Right, yes, of course, when we were talking about that the last time. But if you compare the savings that are possibly to be made now for borrowers, and you compare it even to the cost of renting, would it seem that this was a good time to buy a house? You know, maybe only in hindsight will people realise that, oh gosh, that was the golden opportunity. I
think this period of time now is a golden opportunity, because we've had a huge reduction in supply. We've gone from 90,000 units to maybe 20,000 units in a very short space of time. So while there is an overhang in the market at the moment, and people are struggling to get prices for their houses when they're trying to sell them, there will come a time when you will have more demand, and the basic economic law of price stability and price on demand, as demand rises, prices generally rise. Okay. Particularly if supply has been curtailed. And the building machine takes time to grow again, because the skills are lost, people emigrate, and that can become a big problem.
All right, well, I know we keep saying we'll get onto the home insurance topic as well, but once again we've run out of time. So next time, Gerry, thanks for being with us once again on the show. And any queries for Gerry indeed can be sent to us here by email. It's info@channelsouth.ie. Meanwhile, next week, Stephen Dunn is going to be with us, and he will be giving us his home decor advice. So that's also something to look forward to. We are in Dungarvan tonight and all this week indeed for South Tonight. And up next, we meet Rosarie Keeley. She's from the Waterford Sports Partnership. That's in part 2 of the show.